So today we will be looking at the January 2021 paper 2 POA. It says answer all questions and it's a 3-hour paper, but we will be doing question 1 and this should take you about 21 minutes. So first thing you're going to do, you're going to read your requirements. So it says using the form provided below, prepare the income statement of Isin Barbara. So you go back and you see the reported date. So the date is the 30th of December. Um, it's an income statement, so you highlight all the income statement amounts, just to ensure that you're picking up everything. This is an incomplete record question, so there's additional information that are given, and please note that all additional information will be included in both the income statement for adjustment and also for the financial position. So always ensure that whatever additional information is given, it will be presented on to both financial statements, which is the income statement and the financial position. So you go back and you ensure you make your necessary headings. So the first thing you're going to write is the name of the company, the person. If it's a sole proprietor, the business, the name should be the first thing to indicate what the financial statement is referring to, as in the person. So it's, for instance, Barber Salon, and it's an income statement. So it will, remember, income statement is for the year ended. So you'll make your heading to support this. So it's income statement for the year ended. It's a December year end 2020, so it's December 31st, 2020. And this would be all that you need for your heading. And this is like about a half a mark. So please make use of the marks that you're getting in your exams. Then you'll go and you'll put in the dollar sign to indicate that you're dealing with figures. You can put 00 if you wish, but you don't have to. Now, when we start the income statement, the first thing we start with is our revenue. This trial balance is received from customers, so it's the same as revenue. So just highlighting that for future. The amount is 31,700. So you'll add in your revenue section. There's no adjustment to your revenue. So you'll just have that as that broad figure that was given on your trial balance, which is 31,700. From what I've seen, there wasn't any cost of goods sold item. So what you're going to do now is to add your heading with your less expenses. So what you're going to be included below this is all the expenses that are given in on the trial balance. So the first one we have is rent expense, and I normally advise students to cross out each transaction as they go because it can be time consuming. So for the expenses, the rent, the amount that is shown on the trial balance is $4,000, but there is also rent prepaid. Remember, prepayment mean that it has been paid. We have already credited our bank. So what we need to do is to eliminate that amount because it does not belong to this accounting period because it says prepaid. So you eliminate the amount of expense that you would have had on your trial balance, and that would buy the $800. So you get 32. The next we have is the electricity expense. Do the same crossing, which is 1,200. There isn't an adjustment for electricity expenses, so you just annotate that just as how it was given the trial balance to the statement, to your income statement. So you will have your electricity expenses, and the amount is 1,200. The other expenses that we have is the general expense, but there is also an additional note for general expense. So after you identify your expense, you look to the note. It has been unpaid. So what this is saying, it's this gonna be added because there's an invoice sitting on the desk for $500 that is has not been paid as yet. So and it has a date for the third within 2020. So of course you'll have to add that because remember we have to talk about the prudence concept. So the amount that we're getting here is $1,700. The next expense that we have for this is the supplier's expense, and this is $1,000. Crossed out that $1,000, and we also have wages expenses. There's no addition to either, so both can be presented on the statement of financial as is. So it's supplier's expenses $1,000, and wages, trying to make this a little neat. You know, presentation accounting normally like to see everything to be consistent. So that's $3,000. So that just put everything together so it's in line, talking about figures. For the next type of expenses that needs to be presented on your income statement is the depreciation. So one is using net book value and the other is straight line method. Net book value is the cost minus the accumulated, not cost, the net book value as at the end of the net book value, which is 20,000, and the provision for depreciation accumulated amount is 2,000. So when you reduce the 20 by 2, you'll get 18, and it says it's as a rate of 25. So we just put a broad heading that says depreciation. You can hyphenate it if you'd like, write DEPN, and then highlight the different non-current assets that are depreciated asset. In this case, we have the fixtures and equipment. So we start with our equipment. This is the one that has the reducing balance method. So it's 20,000 as we had noted, less $2,000, which is the probably accumulated amount, and they give a net amount of $18,000. So this is a net book value amount. So what we'll do, we'll find 20% of that, and that will give us $3,600. So that is your expense, your depreciation expense for the year. Oops, 603. 3,600 it should be. That is your expense for your equipment depreciation. The next item is the furniture. Now this is straight line method. So all you need to find is the percentage of the cost amount, because that is the amount that will be taken out for whatever period they're doing. It's 5 years. As you can see from the financial statement, they already had the trial balance $1,000. So this would be the third year of furniture being depreciated. So we need to get some more space. So I'll just remove these line items, move up so that we have a good enough space to have our net income or net profit at the end of the period. So based on the information that was given, there is no other expenses. So what you can do is just add everything together and take it over to the right hand side, and you put a bracket to denote that everything is expensive, is less. Instead of putting each line item in a bracket form, you can just do one. You won't be penalized for that. So the total is 14,200. That's the total expenses that we have incurred for the year ended at the end of the year, 30th, 1st of December 2020. And We have a 31,700 revenue, and to get our net income, you take your expenses from your revenue, and the net income as at for the year ended, 31st of December 2020 is 17,400. Next thing that we're going to do is that it says using on page 4 and 5, do an extract of the statement of financial position. Remember, when you're doing questions, you can look to see where you find the easier mark, but you cannot finish this part unless you have done something to the income statement. So if it is that you're just gonna make a little working out at the end of the page, at the end of the additional, in order to move with this section of the financial position, then fine. And remember, as we said, it's an extract. So what we do, we identify the name of the company which you're preparing the extract for, and you make statement of financial position. And remember, when we're talking about financial position, it is a snapshot, snap of what is happening as at. So as at December 31st, 2020, this is what your statement of financial position would be, and they said an extract, so you'll have to identify also when you're writing your headings to put an abstract. So now you will put the cost, the depreciated amount, and your net book value. So what you'll do, you'll put in your dollar signs to make everything in a systematical, consistent way. So you start by putting the non-current assets because that's what the question asks for. And your non-current asset would be all of your fixed assets that are presented on the trial balance. So after adding up your non-current asset, there are two non-current assets that are presented on this trial balance, and that's the furniture. So the furniture at cost and the equipment at cost. The furniture at cost is 10,000 and the equipment is 20,000. So you go ahead and you'll identify the different non-current assets. So the first one that we're gonna add is the furniture, and remember the furniture was $10,000. And then we go and we have the equipment. Equipment was $20,000. So that's the cost. So you can go ahead and identify the provision for depreciation and the current amount. So for the cost of the furniture, the amount for provision for depreciation is 1,000, and we calculated 10 for the current amount, so you'll get a 1,500. Also for the equipment, it was 36 we calculated plus the 20. So it's 1,000 plus the 500. So that would give us $1,500. So you put that part in your depreciation, and you have it in the minus bracket because you want to show that this figure will be deducted from the line item from column 10,000. The total for the equipment is 5,006, which is the 3,600 plus the 2,000, and the net book value for the equipment is 14,400, and the furniture is $8,500. And then we draw a line, to show the information. I forgot to put the extract at the top, so at the end I will be including the extract as we go by. Total at cost was 30,000. The total depreciation to date is $7,100, and the net book value as at the 31st of December is 22,900. And you do another line just to close off that section, and that's all that is needed for that question 2 of question 1. So in this one is given to you, tells you that below are description of accounting trans adjustment at Austin Barber and Salon. In the space provided, enter the letter code which represent type of adjustment. So basically, they are just reiterating what you did from at the top. So the first one is a bad debt, where an account receivable is unable to pay, or outstanding invoices to be paid. So if you have outstanding invoice to be paid, then now you're having an accrual expense. So you'll put the E, just the E, and just move on. You don't need to write out the accrual expenses. So E says non-current asset lost in value. So that is the definition for, excuse me, sorry, depreciation. So you'll put C for that one. And expenditure, remember you have different types of expenditure. You have capital expenditure, you have normal operating expenditure. So the expenditure incur every day as your daily operation would be A, matches the definition. The final one is cost less depreciation to date. You know that is net book value. So you look to see, and that would be B. So that is B. And that would complete this section, and that's 4 marks. So get your 4 marks, get it done, and just move on to your other question. Of course, trying to make everything in line for presentation. So if this was the exam and you're writing, you just ensure that everything is written and legible for the examiner to mark your paper. So this, it says prepare it says Zaida received a check for a sum of $8,000 from a debtor's 12. So the debt outstanding was $12,000. And you received a check for 8, so you'll be debiting your bank account. You receive some money and be reducing your you'll be reducing the debt that Zahila had. So you'll be debiting bank and crediting Zahila the customer's account with the $4,000. It says for 1 year. Yeah, the question is asking you to clear is unable. No, so still owing, sorry, is $4,000 as bad debt. So the question is asking you that is saying that it must be written off. So therefore they will have to incur that as an expense. No narration is required. So you make your journal entries. So it says 2 years later, and if it started is 2018, then 2 years from 2018 would be 2020. So that just give you the date. So your date that you would have is the third. So that's the date when you're writing off the budget. So that would be the 31st of December 2020. And what really expense here is your bad debt, or all caps, bad debts. So we'll enter our bad debt amount of $4,000, and that's a debit, that's an expense to the income statement. So you're gonna debit the bad debt account, and the same date applies for the corresponding $4,000 credit, and this will be reducing the receivables. We're no longer going to get that receipt. That amount is no longer receivable. So what we'll have is accounts receivables and the name of the customer. That in this case it would be Yoshid Sida. So you just write accounts receivables to state the account that you're making the journal entries to, and the name of the customer, which is Yoshida. And remember, we do a little indent after when you're making the credit entries. So the amount would be $4,000. It did say no narration. So this is where it ends for 2 mark. The next question is identify 2 causes of depreciation. And this is what you think are the causes of depreciation. So one of the first one is wear and tear. So you just enter, you just write wear and tear. You don't need to write 2 causes of depreciation or wear and tear. All you need to do is just write it, identify 2. And the next one that we'll identify is obsolete. That is when it's no longer. So we're talking like maybe like the telephone, a landline is going in a bit obsolete because everyone has a cell phone or typewriters and fax machines and those things that are no longer being used. So this concludes the question